Have you guys ever felt like scalping is just too hard? Well, I've cracked the code because by the end of this video, you guys are going to be able to learn the best scalping strategy to be making a few $100s trading the 5 minutes time frame. Before we continue with the video, I want you guys to stay until the end because I'm going to be showing you guys the secret tools that I actually use to help my 5 minute scalping to become much more profitable. Now, first things first is I always emphasize this every single time. Just look into the daily. But since we're scalping, we can only take a look into the current market price of the daily candlestick and see what the daily likes to do. So looking into the daily, we can see the market structure is looking like this, obviously bullish. But here is going to be the main star, which we're going to be looking into the 1 hour time frame, and we start marking our zones. Now, the first thing you're going to be doing is you want to be looking into the current market price. Looking into the current market price, you want to start marking every single levels that you have. So for example, this level right here, we can even mark this whole zone, just refine it to this one right here. And for our buys, we want to be marking onto like maybe this level right here, or maybe this whole level. This is going to be the level that we're going to be marking potentially if we're going to be looking for entries. Now, one of my favorite tools that I really want to be using is called the parallel channel. Now, you want to be grabbing the parallel channel all the way right here to the top and all the way to the bottom like this, and drag it all the way down like that. The reason why I grabbed the parallel channel, because this is the parallel channel for this top and all the way here, okay, to the swing point, and we want to be targeting all the way to the lows. Now, the parallel channel helps you get a pretty much like a direction, like a short bias for the day. A short bias for the day where you think direction is actually going to be going. Now, here is going to be the beauty of the entire thing. After you spotted your parallel channel, you're able to spot your support and resistance. You can start marking your current market price, support and resistance. So for me, I started marking this level right here. Now, the next step is going to be the waiting game. Okay, at least we know we have all these zones here. So after we have this beautiful H1 level that we marked, we just want to be waiting. Now you can see the market is just consolidating, and we just know that this is going to be potential internal range liquidity. And you can see the market is just ranging right here. And then once we created a breakout to the upside, you want to be waiting. Now here's a few things that I really like to do when I take my entries. You can see that we did have somewhat of a squeeze over here, right? If we have a squeeze, I always like to plot my trend lines, and I want to be waiting for a trend line break at least to show that the channel actually broke, and that means that the direction wants to keep going to the downside. So once you see this direction shift in the market, you just want to be waiting. This is when you want to be start looking for an entry. Now there's actually a lot of entry models we can use. For example, one is going to be some left shoulder entries right here, and one of them is going to be this area for like an entry maybe around this level right here, right? So now what I'm going to be doing is I'm going to be putting an entry just right here, a short position just around this level, stop loss all the way to this high. We can just put that around 27 pips. Now, where is going to be the target? The question is, where is going to be the target? This is why I always emphasize that having a parallel channel is very good, because you're able to see the bottom of the range or where the market is going to be having the next target. You guys should understand that this is going to be a potential external range liquidity where market would like to target. Okay, we want to be targeting this first as our first TP. And the next area where we're going to be wanting to start buying is going to be around this level. Now, why did I mark this level? Simple. That is actually the H1 support point. And remember, the higher time frame buys for the market is obviously bullish. Okay, we want to be buying sooner or later. Now, after this one right here, once we had our entry, if we get filled over here, we want to be targeting all the way to the lows. You can see that we had some kind of like a float over here, and that's totally fine. You can actually take a look here that you're actually floating, and that's totally fine. A lot of people have this beginner mindset or beginner misconception that you should be having sniper entries every single time. That's actually wrong. Okay, floating is fine as long as you don't hit an SL. That's perfect. I'd rather float for a bit and hit my final TP than missing a trade because I was trying to get the most refined area. Now, if you try to take a look over here, you can see the market suddenly had a consolidation, right? Had a consolidation, and we had a breakdown to the downside, and that's absolutely perfect. Now, once we got our breakdown to the downside, this is the beauty of trading the lower time frame, because you can start trading continuations. Now, you can see that we did have a very clean market structure break here. The next thing that we can do here is have another potential entry. You can see that this is obviously the very clean demand level right here. Now, we want to be looking for a potential area where we can start looking for continuation for shorts, in which I'm going to be marking this level right here, just like that, and I'm going to be having another short position right here. Stop loss maybe a little bit over the high, targeting all the way to the lows. You can see that's over 4.6 RR, 8.16 RR, and let's try to see how this would play out. Maybe I don't get a fill here for sure. Oh, there we go. Yup, perfect. We did seem to have a very perfect entry right here, and let's try to see if we can have a little bit more continuation entries around this level, if we can find it. But I'm really curious if we can have some continuation level here. Okay, seems like we're not. You can see the prices are actually just consolidating. We're actually hitting the bottoms of the market here. Just market is just pulling all the way down. It's gonna be patient. Remember, this is gonna be our final TP level. Okay, we won't be waiting. Oh, you can see exactly right here, the one that I mentioned. This zone got perfectly tapped, but unfortunately, I did not put my entry, so that's totally fine. Wow, you can actually see that market is actually pulling down exactly the point that I marked, but that's totally fine. Okay, sometimes we miss it, but that's totally fine. Okay, that's trading. Okay, you don't catch every single setup every single time you trade. Now, you can see prices is hitting our first TP. So we already scaled around 90% of our position here, and this is going to be the final TP where we're going to be looking for a long position right now. So you can see the prices reach all the way to the bottom. Once you reach all the way to the bottom, that's when you can start monitoring onto the H1 time frame and start to get your buys in the market. Here is the next few things that I really like to do is once you start to see that market is reaching to the bottom and created another structural point, you just want to be waiting over here. Now you can see that prices created a very clean breakout here of the trend line, and we got some, maybe some left shoulder over here as well for potential entry points. Then we can start looking for an entry just around this level, just some entry around this level. So once we have this zone right here, we can just take an entry right here, or we can just wait this out, or we can just take a direct fill, stop loss a little bit below, and now our target is gonna be the high of the range. Okay guys, perfect. So now we're gonna be looking into the H1 time frame and try to identify where's the potential resistance points that we can actually mark. Now you can see that we did have this gap level right here, which we can actually pay as an importance, and we can actually have this highs here for potential resistance points of the market. Next thing, you can just go to the 5 minutes time frame. Let's have our entry here. Let's see if we get filled. I think we'll get hit on stop loss over here, and that's totally fine. There we go. We're not hitting the stop loss actually, so we're pretty much chilling. After you had pretty much your first breakout over here, you can always have your next entry, right? You can see that we did have this demand level, supply zone being taken out, right? So once we had that supply level getting taken out, we can then have another entry, pretty much another entry right here, potentially some continuations. You can have your SL right here if you want, or maybe just a little bit this low so we can get hit on break even. Now you can see what market likes to do next is, I'm not sure if you get a fill. Okay, pretty much this would have been your fill here after this candle closure, just around right there. The next candle filled in, which is this one, that's supposed to be your entry. So now you got your fill there, but seems like we did have a miss here. It's okay, we kind of missed this setup. I did play good. Now you can see that market is rallying, market's kind of pulling back down. Okay, that's totally fine. At least we're break even, and boom, right? You can see that we did hit our potential resistance points in the market, and okay, market's kind of starting to flip down again. Market's flipping down. Okay, we hit our resistance point, perfect. We hit our TP, and you can see that market perfectly rejected around this level, which is our potential gap level, in which you can see that market rejected this gap point, broke to the point, pull back over here again, and had an impulse. Now once this happens, you can start marking your next parallel channel, which is going to be this low all the way to this low right here. So just stretch it all the way up, and we could potentially have it all the way here. Now we can see that there's a high chance the market might keep on rallying to the upside. So you mark this level, the next step that you can do is potentially having this area as potential target points for your long positions. After we had our exit here, we can start to keep holding this all the way here for potential runners, and we just want to be waiting on what market likes to do here. So after we mark this point, we want to be waiting now, because we saw that the H1 candle has already printed. We can mark this area as a demand level right here. This is going to be a demand zone, this whole level. So if prices are going to be pulling back over that level, we want to be looking for an entry pretty much. So if market is pulling all the way down to the downside, we just want to be waiting for this, if ever, because I'm not sure if we do have any fresh resistance zones. I don't even see any fresh resistance level anymore. Okay, perfect. We had our perfect bottoms here, because I believe this is during news. I'm not sure, but you can see that once prices came all the way down to our level point, right, to our level area right here, we can start looking for maybe a potential entry, if ever we can find like some entry models here that we can use. Looking into this one, we did have another potential point of interest where we're going to be looking for resistance. This is going to be our potential resistance area here. That is obviously a left shoulder. So looking into the current market price, it seems like prices is just consolidating. I don't really like this because of the wicks that we're seeing, so it's okay. Just kind of look into the H1, and we can see that we did have a large wick to the downside right here, but we are still inside the levels. We are still rejecting that demand level that we marked, right? So we just want to be waiting waiting for entries if we can find some entries here. So you can see the price is just consolidating. We got ourselves our pretty good breakout. Okay, we got our breakout here. We can mark our demand level just right here. Okay, our potential demand zone. You want to be waiting. You guys want to be waiting because we actually got ourselves a breakout level right here, right? And then now I'm gonna be rooting for market to be breaking to the upside. So we can have our entries here. Okay, I want to see if this level will get broken out. So that once that level gets taken out, we can potentially just have another entry right here, right? This is gonna be a classic breakout like this, right? You can see that resistance turns to support. So now we can do that. Obviously stop loss right here, and we're gonna be having another entry a little bit down here, and our target is gonna be here for our first TP, and our final TP is gonna be all the way up there to the range. Now let's see what happens. We kind of just did have a pullback, consolidate a little bit. Oh, I think we're gonna hit SL. Okay, we got hit on SL, that's fine, but we got filled here perfectly onto the bottom. Remember, our target is gonna be all the way here, right, top of the range, and that's totally fine. You get hit on SL, that's okay, because you have to understand that trading is a process. Okay, trading is just a process. You'll never get 100% win rate every single time you trade, and that's fine. Okay, you shouldn't always try to expect you get 100% win rate. Now once this happens over here, the next step is you guys just want to be waiting, and you can see what happened over here is once we got ourselves some beautiful breakout, this is going to be a really clean breakout point. Let's try to see if we can probably catch that resistance turn to support. Now let's try to take a look over here if there's going to be some very clean structure we can mark. Maybe this level right here, we got ourselves a breakout, then maybe we can use this one right here. Stop loss gonna be this low, same target as usual. Let's see what happens here. We did not get the pullback, that's totally fine, that's okay, but we're pushing prices to the upside now, and you can see we're kind of rejecting this level. So I don't want to be using this point now. We want to take our entries out over there, and you can see that prices is actually rejecting over our left shoulder, our potential roadblock, but it's okay. I'm really holding all the way to the top. Okay, that's 7R right there. So you want to be waiting. You just want to be waiting over here, right? Remember, we already got our buys in the market, so it seems like we're trying to pull back down all the way to the downside, right? I think boom, we will get hit break even here because we perfectly rejected over the H1 level, right? We perfectly rejected on the H1 level. Once we had the rejection, our rejection right here, we just want to be waiting here. So we want to be waiting on price to actually develop. And now you can see that we created that impulse over there, and you can see that this structural point kind of failed to hold. Okay, that structure level failed to hold. And if you try to take a look at the H1 level, you can see that we did have our demand level right here. We had our supply level here. Remember, we are still very bullish, right? We are still bullish over here because remember, we already reached the bottom of the channel. We're just hovering in the middle. Our target is going to be all the way to the top. There's a lot of stuff you can do. You can probably have this area as potential levels for an entry or a little bit to the bottom, right? You can always have your entries maybe a little bit to the bottom, like right there. Now you just kind of wait for this one right here. Oh, you can actually see that market reacted perfectly onto this level that I mentioned, right? Perfectly to this level. Now when you're trading, especially into the 5-minute scalp, it's more about having that intuition thought and being really quick to react in the market. Okay, because in this time I already knew that the bias for the market is obviously bullish. We are sitting in an H1 channel that has a very big potential to just follow this channel and hit the top of the channel, because you can see the prices went all the way to the downside, rejected onto this resistance level. Market had an impulse. We created a new parallel channel over here, and now our next final TP is gonna be where? All the way to the upside right there. Now we can just wait this out. You can see we had our entry. This obviously just break even now, right? You can just break even this structure right here, right? I believe you get hit and break even here. If you don't, well, that's fine, but you can see consolidate, that's fine. Now remember guys, every single time if the market is ranging disgustingly like this, okay, that's totally fine, because you have to understand that the market is not bullish every single time. It's not trending every single time. You will have your channels, you will have your breakouts, you will have your trading range. Remember, once you have market like this is when you should be adaptive. This is why if you're a beginner, it's always high risk to be trading the lower time frame, because you must have the very good intuition, have that idea that the market will, you should have the intuition or be able to quick to react to understand if the market is ranging, trending, or creating breakouts. You should be waiting for this. You should be able to identify what the market structure is doing. Now looking to this one alone, already I was really pretty much confident. I was like, okay, structure is ranging. At least we have our entry here, a very safe entry. I don't care if I get hit and break even. That's fine. Okay, because you can see onto our previous days, we had a very clean setup. Clean short, clean long, right? Still holding this. The final TP, I have like 10% running. We had a continuation here. We got hit and break even. That's totally fine. We want to be waiting for this. If we get hit and break even, that's fine. Okay, if we get get hit and break even, that's totally fine. You can see the market is starting to rally to the upside, exactly to the point where I mentioned. Okay, now once you hit over here, you can see that, okay, this is potentially another roadblock level that you got to be careful. Now you can exit your positions here for a quick 5R. You can leave some runners running already. Boom, you can see exactly right here. Once we hit our final TP, I'm already done. That's already the top of the parallel channel. We created a breakout, and we were able to do this by just understanding the 1 hour time frame, having our secret tools, which is the parallel channel, and then having some very clean entries from the 5 minutes, having some continuation entries, identifying the points where potential roadblocks, when to start going on break even. And yeah, that's it. That's all you guys really need to start scalping the financial market. And you can see right here, we bagged around 4.6R, 8.16 RR, 12.62 RR. We hit our 1 hour loss. We hit our break even. Quite unfortunate. We didn't hit a I did not tell you guys to actually trim some over here. So pure transparency, we got hit and break even here. That kind of sucks, but we had this crazy winner here, hit 7.9 RR, and that's it. Okay, that's how you pretty much scalp in the financial market. And you can see this in a span of 4 days, we're able to get a lot of beautiful entries like this. If you guys want to see more content like this, make sure you guys comment down below Surge, and especially please like this video, subscribe, and turn on the notification bell so you don't miss out on our next videos like this. And I'll be catching you guys onto the next one. Goodbye, guys.